Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA. We'll look at various time frames, and we'll also take a look at market cipher. So we're going to start here looking at the hash ribbon indicator and the history ever since 2011. And we have just had a buy signal on the hash ribbon indicator. It has been confirmed. And we have had 16 buy signals since 2011 here. And we're just quickly going to go over the history of those. So just looking at the first cycle here, we did have this buy signal at the end of 2011, and it did appear on this candle. And the way I use this indicator is I look for the previous major low. So an area where we did have a decent pullback and put in a clear low. And looking at that previous low before the buy signal, marking it off, quite often we never come back to that price again. And just looking at the next buy signal here, the previous low was down here where we had a decent correction, and that's marked with this yellow line. We can see we never came back to both of these levels again. The third buy signal was here. This was the previous major low. And during the whole bull run, we never came back to these levels again. So even though it didn't get the bottom, it did tell us that the bottom was in with that previous low, and it was still a great buying opportunity. Let's look at the next cycle now. This was the bear market in 2014. We did get a buy signal here on this candle. The previous major low after this correction was down here. This was actually the bear market low. It does look like a double bottom here, depending on what chart you look at. On other charts, this was actually quite a lot higher compared to this low. So we're counting this as the bear market low here. We did have two other buy signals here, but I am using the same major low here. So all of these did give us this low, and it showed we never came back to this price again. The next buy signal was here in 2016. This was the previous low after this big correction, and we never came back to that price level ever again as we continued in the bull run. And looking at our more recent cycle here, 2018 bear market, we got a buy signal here on this candle. This was the last previous major low. We never came back to that price again. Then we had a buy signal here. It did indicate this was the previous major low. On this occasion, the signal was wrong. We did go below that level. This, of course, was the COVID crash. So this was a bit of a black swan event. So understandably, we did have this big crash down. The next buy signal here was on this candle, and this was obviously the major low during COVID. We never came back to this low again at 3.9. We had another buy signal here. This was the previous low, or we could look at this as the major low. Either way, we didn't come back to either of these two levels again. This was at 8K. We had another buy signal here in 2020. This was the major low before that. We can even use this low here at 16.2K. We've never come back to this price level ever again. So we can see how consistent this signal has been. If we move forward now, this was that 50% crash here. We got the buy signal on this candle. This was the previous major low. And we saw that even though it did give us a good signal, we did produce a 70% run from this low. So it was still a good buy signal from here. We did end up coming back down and negating that signal. So this was a false signal here. And I think it's due to that double top pattern in the bull market. We didn't have that blow off top, but still a false signal. On the way down here, this is more recent, June of 2022. We got the buy signal on this candle. This was the major low, and it looked like this was going to be the bear market low, but we did end up coming down here with the FTX collapse. It's not quite a full black swan event, but something unexpected. And I think if that didn't happen, this would have been the bear market low. So this was another negative signal here. So we have had three false signals. And then we got the buy signal again here telling us that was the low, and we aren't going to ever go back to that price again at 15.5. And now we have had our most recent buy signal here, and we have to look at the previous major low here. This was at 24.7K approximately. And so looking at the history, I would have to say that I don't think we're ever going to go below this level again now. We are currently at 29K. I think we can go maybe as low as 27, but based on history, I don't think we ever go below 24.7K again. And just looking at the overall history here, so 13 out of 16 times when this buy signal flashed, The previous major low marked an area that we never got down to again in the history of Bitcoin, and this happened 81% of the time. So just looking at statistics, we can be 80% probable that we're not going to go below 24.7K ever again. So just keeping up our comparison with our current cycle and this previous cycle here from 2014 to the end of 2017, we have been looking at this as an ascending triangle pattern and comparing it to in the previous cycle, this ascending triangle pattern. And we do have marked out here all these golden pocket areas. These come from taking the fib retracement from the tops of these dead cat bounces and the all-time high down to our bear market low to give each of these golden pockets. The same with our current cycle. And these fib levels were based on the regular and the log scale fibs. I'm just showing you that because we are going to look at the Ichimoku cloud, and it does have these fib levels on there also. Let's switch to the 2-day time frame. We're going to be comparing that previous cycle we just looked at here on the left with our current cycle. Basically on the 2-day time frame here, we're looking at the 2-day Ichimoku cloud. Coming out of the bear market here, after we have that first rally and we broke that first key resistance level, the bull market had started here. And when we look at the Ichimoku cloud, basically it acts as support on the way down. The thicker the cloud, the stronger the support. And on the way up, this cloud can also act as resistance. We can see we got above the cloud, and on all these pullbacks here, we saw the cloud acted as support. And these are just those golden pocket fib lines from the other chart. But we can see as we move on, that next move to the upside, we had this pullback, quite a long wick here. We did go slightly below the cloud, but pretty much acted as support here. We had that next move to the upside. Again, on this pullback, we got support of that 2-day Ichimoku cloud. And again, on this pullback, we got support of that cloud all the way up in the bull run to the peak. So this was quite a good indicator to use. Look at good entries whenever we came into this cloud on these pullbacks. And if we look at our current cycle here, this was the bear market low. We broke above the 2-day Ichimoku cloud here. On this pullback, we came exactly to that cloud, saw that strong bounce. On this second pullback, we came into the cloud also. Both times we pretty much touched the cloud exactly near the bottom. We got that second strong bounce, and we can see now we have spent a lot of time here going sideways and correcting. And the cloud was initially down here at 25.3, and because we've gone so long sideways here, the cloud has now moved up to about 28.1K. If we are to do a similar thing like these previous pullbacks here and like that previous cycle, then perhaps on a pullback here, the lowest we go is about 28.2K. And if we last until the end of the month, this will move up slightly to 28.3K. Once we go into that cloud, perhaps coming to the bottom of it, like here and on this occasion, then we see that bounce to the new highs. So just zooming in on both of these now, we have been talking about this ascending triangle pattern here from that previous cycle and doing a similar thing here with our current cycle. As we talked about on this chart, between both of these golden pockets, this ascending triangle pattern and our current ascending triangle pattern here. So let's just zoom into that section here with our previous cycle section. Did come up pretty much to that golden pocket area, which I think is similar to this area. We dropped, we had a bounce, and then we had that drop pretty much down to the golden pocket area below. And here we had a drop, a bounce, and then we corrected back down to that golden pocket area. Came into the cloud here like we did here. We saw a strong bounce. This time we made a higher high. This one was a lower high here. And then we saw we did come into the cloud again here. And here we also had a very long sideways action with not much price movement. And this went for pretty much a whole month here in the range of 406 to about 420. And here we have spent about a week away from a month in this sideways action. So I think we're in a similar spot here to this area, and eventually we're going to push back up here and break that second golden pocket area. So I think we do come into this cloud, perhaps touch the bottom at 28.3. and then we make our way out of that cloud and eventually break this second golden pocket area. And so this could happen sometime in September or even early October. But again, we can use this 2-day Ichimoku cloud as a guide here, where I do think it will act as support like it did on these two previous times and like it did in the previous cycle. And if we were to overlap the previous cycle here, taking it from this low and putting it at this low, we can see how closely it does match up with our price action. We did have this run up, and then we have spent a lot of time consolidating. And I think we could see something like this happen. We see the next move to the upside, another throwback, and then a slow grind back to that previous high. This would be the halvening in April. And if we follow this fractal, we could be anywhere between 60,000 and maybe 48,000 if we are to do a similar path here. Looking at the 2-week time frame now, we've drawn in that ascending triangle pattern. On the 2-week time frame, on the regular scale, this line does connect very well. If we just move this triangle pattern, we can see the low here, the low here, and the low here, and they do connect quite well on the 2-week chart. This current candle did open this week. It would tell us that the bottom of this trend line is at 28,550. Remember looking at that Ichimoku cloud, the bottom of that cloud was at 28.3, so pretty close to this trend line. So perhaps we see sometime this week or next week while this candle's still active, maybe we see that drop 28.3 to 28.5 on the next 2-week candle. That will start on the 28th of August. The trend line would be sitting at 29,300. But this is the 2-week scale, so there is less resolution, less candles in the same amount of time. And the weekly does, of course, change this trend line quite a bit. So down to the weekly time frame now, we've got that same ascending triangle pattern drawn in. And basically, the solid white line is just connecting these two lows. And if we connect the overall lows here, it also gives us this dotted line. So there is a bit of a range on the weekly time frame, whereas that 2-week did give us a clear line. But we do need to look at both time frames. On the weekly, on our current candle, the first trend line is sitting at 28.1k, and there is a weekly order block there at 28k as well from this red candle in an uptrend, and the bottom of the trend line is sitting at 27.3k. This is also the golden pocket, taking it from this low to the high, and the 382 fib from this low to that high. There was that confluence of fibs. I was thinking this was the target as we were coming down here. And the longer we go sideways here, the less likely that is for me. But we do have to keep in mind both these trend lines, and both are possible. But we do have that Ichimoku cloud at 28.3k, which is about in line with this trend line. We could, of course, wick just below that Ichimoku cloud. So there is still a bit of a range here. The lowest would be this dotted trend line on next week's candle. That would be down at 27.7k. So obviously we spend a few weeks here. Eventually, by the start of September, that bottom trend line would be at 28.3k, in line with that Ichimoku cloud. But we can also look at the 21-week EMA, which we have looked at previously. We've shown it several times, so I don't think we need to show it again. In bull markets on pullbacks, we generally get support of that 21-week EMA. We can wick below it, but generally the bodies of the weekly candles don't close below it. Look back on previous videos if you do want to see a history of that with the other bull market. But we can see now with this current weekly candle, the 21-week EMA is right in line with this solid trend line at 28.1k and in line with this order block. So there is a bit of confluence there at this point. I don't think we close weekly candles below this EMA, even though we can wick below it. And we also have extra support from the 200-week moving average. That's currently sitting at 27.5k. So still looking at a possibility of coming down to these areas, but the longer we go sideways, the higher that low becomes. And obviously, if we can start closing weekly candles above some of these other order blocks, it would change the scenario. If we got above both order blocks, above 30,270, then I would think we're probably in the clear, and this was the low. We could come up, retest it, and then break out. But currently we are still getting resistance from this order block, which goes from 29,450 to 29,9. We see all these wicks trying to close weeklies higher, but ending up closing lower. So as long as we're below at least this order block, it does seem more likely that we will come and test this trend line at least. We can also look at a trend line here on the weekly RSI, just connecting these highs. We do have 3 touch points here. And if we do break above this trend line, it would increase the likelihood that we may have a push to the upside. We are quite close to it. We just have to wait and see on that one, but this could be an early indication that we are going to move back to the upside and attempt to break this ascending triangle pattern. And going down to the daily time frame now, still got that ascending triangle drawn in. This is those confluence of fib levels down at 27.2, 27.3. I've added in the 382, taking the fib from this low to that high. We can see how it pretty much has been acting as support. We had a few closes below it, but we have been pretty much hovering around that 382 fib. And I think we're possibly doing this falling wedge pattern. We have one touch on the top. I like to start patterns at absolute tops or absolute bottoms on pullbacks. So this is the first touch point, and this would be the second touch point on the top. And generally with a falling wedge, we count the alternating touches, and we generally get 2 touches on the top, 2 on the bottom, and then we see a breakout to the upside, which is more probable. In this case, we've only had this one touch on the bottom because we didn't come back to the upside. So if we are forming this pattern, perhaps we need to come down and sweep those lows. We can also redraw this falling wedge once that low is reached. It doesn't have to be connecting these lines. So wherever we come in, perhaps we come in at 28.3 here, which would be the bottom of that 2-day Ichimoku cloud, and also this trend line as we approach the end of the week. Or perhaps we end up going lower and we can redraw this falling wedge pattern. And we could look at the previous price action here. We could also see a falling wedge in this price action, depending how we want to connect these lows here. We had a clear touch at the top here. This could be our first touch here down the bottom, second touch on the top, second on the bottom, and then the breakout. We could also draw some trend lines on the RSI here. We can see on the daily, these lines do connect quite well, where we have had several touches. We could also just redraw it with the highest touches here, which I do tend to prefer, as once we break the harder trend line to break, it is a bigger confirmation. And we can also connect the lows here. And perhaps we just need to come down and touch this trend line again, and then we squeeze here as we go into September, and then we break that RSI trend line and also this falling wedge pattern. Just something else to watch for. And there was a comment on the previous video by Salt6622. He did mention a bigger trend line on the daily time frame going back here to around June 18th. And we could draw it connecting all of these lows, and that would be a worst case scenario trend line if we did continue to come down here. But just comparing this previous correction with our current correction, adding in the 50-day moving average in yellow here, we can see that we were above it here. Once we broke below it, we had a bounce and a retest. We couldn't get above it. Then we had that move to the downside. Here we were above it, stayed above it a little bit here, came back down, retested it on a bounce, got that rejection like we got here, and then we came down. We've been going sideways, it came down going sideways like we did here, and perhaps we're just waiting for this final correction before we see that bounce. So this would also support the idea that we do come down to maybe 28.2, maybe this first solid white trend line. Maybe we come down a bit further, we complete this falling wedge pattern and then get a push, see that move to the upside. The VPVR is quite interesting here. We're pretty much at the point of control. The most amount of volume has been traded at 29,270, and this is marked by this blue line here. And we have also been dancing around this area on the VPVR. The next resistance was up here at around 30.3k. But we can see it does drop off quite a lot here until we get down to about 28.1 to 28k. And this could possibly be the area where we see that bottom come in. complete the falling wedge and move to the upside. And just to make that a bit clearer here, this is where it would come in, and perhaps we get a bounce here, and we can redraw that falling wedge pattern. And just looking at daily order blocks now, there are quite a few here. We do have both of these trend lines drawn in, that solid white line, the dotted white line, and we can see we have been getting support from this order block here with all these wicks. This order block goes down to 28,870. If we close daily candle below this could be an earlier indication that we are going to push back down. We have two more order blocks here, one here, and they do overlap at 28k to 28,070. The top of this order block is at 28,360. The bottom of this one's at 27.8k. So this could be a possible target here. Again, if we do close a daily candle below 28,870. And this is where the bottom of that 2-day Ichimoku cloud is, pretty much coming into this order block. And again, we could wick to these lower order blocks quite quickly and get bought back up. But again, I do believe we closed the weekly candle above that 21-week EMA, which was sitting at about 28.1 around this area. And over to a market cipher now. We're going to start here on the daily time frame. I do have the possible falling wedge pattern drawn in here, and also that previous correction with the falling wedge pattern. And I do have the VPVR showing that key level here at 28.1k. And this is also the 21-week EMA in green. I have drawn it on the daily, so I have adjusted the number, basically 21 times 7, to see that 21-week EMA on the daily time frame. This is the 50-day moving average in yellow. And we have been comparing this area with this area, doing a similar falling wedge pattern. We had this run up here, like we had this run up here. Then we spend time going sideways. Here we've been spending time going sideways. We got rejected off that 50-day here, also rejected here. This was the touch on the falling wedge. And if we look at a market cipher on the daily down here, we can see we spend a lot of time here down the bottom with this blue wave, a bit choppy with the green and red dots, similar to here, a bit choppy with the green and red dots. We have had this move up. We've gotten a red dot now. And same here, we got this red dot. We weren't able to get much above this 0 line. This is pretty much this area and this area. And I think we need to come down here, possibly to that 28.1k, like the correction here. And then we look for this major daily green dot on market cipher. We didn't get it here, like we didn't get it here. So I think we need to come down, put in that major daily green dot, come down to that 28.1k area. And then when we get that major green dot on the daily, I think that'll be a good indication that the correction is over. We can see we also came to that 21-week EMA here. We did go slightly lower, so we don't have to go to 28.1. We could come to this trend line, possibly around the mid 27,000 area. But that's something I'm watching on a market cipher. And if we now switch to the 2-day time frame, we see a similar thing also. We see that VPVR support further down at 28.1k. But we see on the 2-day time frame, we had a green dot here. We're currently getting a red dot. And we saw something similar here. We have those circles in the same spots. We had the green dot and we got a red dot, and we had to come down and get that second 2-day green dot that confirmed the bottom. This was also where the daily major green dot was. And so I think we need to come down here, look for that 2-day green dot, possibly the major daily green dot if we do come down low enough. But because we have that hash ribbon buy signal now I'm just looking for the daily and the 2-day green dots on this correction down. And when we get both of those confirmed, it will tell me that the bottom is in. We can also quickly just look at the 12-hour time frame and also see those similarities. We had a red dot up here after this rally. We got the red dot higher up here after this rally. We came down. We've been going sideways here. A bit choppy with the green and the red dots. We're getting green and red dots here. And now we're looking for this move to the downside. It doesn't have to be 2 corrections like this. It could just be 1 correction. But again, we're looking for that 1-day and 2-day green dot to give me the confirmation that the bottom of this pullback's in. And it could happen anytime between now and possibly the end of the month. But I think it probably will happen sometime next week. And we will come back to possibly 28.1K. Worst case, this trend line maybe down to the mid 27Ks. But we do have that support on the VPVR. So I think it's more likely we get a bounce around the 28K area. But that's about all for today. That was quite a long video. Hope you enjoyed that analysis on Bitcoin Mamo. I'll see you next time. Bye.